This week, the markets are trembling. US inflation numbers just dropped. Tech and banking giants have released their Q2 earnings. China's GDP sent shockwave globally. And yes, tariffs are back in the headline. What does it all mean for your money, your portfolio, and your future? Stay with me. In the next few minutes, I'll be breaking down what just happened, what's coming next, and what smart investors are doing right now to stay ahead. Welcome back to my channel. If you've not subscribed to this channel, do well to subscribe. And if you're just seeing me for the first time, help to hit the subscribe button, and thanks for sharing. First up, US inflation. The June Consumer Price Index came in slightly higher than expected. Why does this matter? Because the Fed watches inflation like a hawk. An upstick reignites fears of rate hike, and that instantly hits stock, cryptos, and even real estates. How does this translate from your wallet? If inflation remains sticky, borrowing stays expensive, cash and short-term treasury yield may still look attractive, but growth stock could wobble if interest rates rise again. Now, here are things to do if you are on tech or speculative growth. Now, the time is to review your exposure. Let's talk about Q2 earnings season. The big banks like JP Morgan and Goldman Sachs just reported headlines, which is strong profit but rising loan default and tighter consumer spending signal. On the other side, tech giants like Apple, Amazon, and Microsoft showed mixed results. Cloud growth is slowing, AI investment are ballooning. Ad revenues are stabilizing but not booming. So what do? Diversify. Don't rely on just one sector. Watch out for companies that are overpromising on AI without real analysis growth. Consider value plays, especially if you've been chasing momentum too long. And it doesn't stop there. China just released its Q2 GDP and its missed forecast growing only year-over-year. For an economy that drives global demand, that's a red flag. And to that, new tariff talk are surfacing in the US and Europe. Trade tensions with China may resurface in full force. Supply chains could tighten. Price might go up again. So for your portfolio, watch for inflammatory ripple effect. Avoid companies that rely heavily on import from Asia. Consider commodity and energy play if supply chain gets choked again. So what's the move to take? Here's what savvy investors are doing right now. Rebalancing portfolio to reduce high-risk growth exposure. Holding more cash on short-term bonds to take advantage of yield and wait for better entry points. Rotating into dividend stocks and consumer staples. Staple things people still buy during uncertainty. Watch tariffs and global data closely, especially if you trade ETFs with international exposure. And finally, they are not panic selling. The market is noisy, but disciplined investing always beats knee-jerk reactions. Subscribe now and turn on your notification bell because we are breaking it all down for you every week. Thanks for watching.
Chioma Media, live